All right, guys. I was sent a link yesterday relating to a zero down house. This is one of the things that you've got to be careful of, and I'll bring this up now because what you're looking at is some of the banks got stuck with properties, and I know some people are actually still stuck in, they're in an area which is a bit dubious in the sense of the properties may actually get repossessed by the bank because of the way the finance was set up, in the fact that the finance company disappeared with money. But this is some of the information you may not be aware of relating to some of the financial crisis stuff. It's stuff that doesn't really get talked about because it just shows you the incompetence of how this money was given out. On a lot of new builds, you normally have to put down a fixed deposit and then up to 40% up front over a very short period of time, and then before the end, you've got a final payment. Now, as I've mentioned before, a construction cost is normally around 45-50% anyway. So if you paid all that in a deposit, they've all got enough money to build it. But in the first 6 months, you've given that money for them to do the construction. The finance companies then went to the bank and says, we've got more money coming, we'll lend against it because we'll have the full amount in the 6 months as well. So let's be realistic here. The first thing is they already had enough money to do the construction. They've gone to the bank and leveraged against it on the promissory note that you are going to give them more money, and obviously they're getting the money up front. You know, they've got the bank giving them half the house and you've got half the house. And no idea what a lot of them were doing with the money, to be honest. Embezzling, doing double amount of construction work, who knows? But the point is those sort of things that caused the real financial crisis on the housing market. Now I'll get to the point. The bank are stuck with a lot of properties that are overvalued. The reality is that obviously these construction companies, developers, whatever, gone bust, and the banks had to take the properties that were built, and a lot of them were never finished, no windows, etc., and they've had to take that in-house and look to put them to the market. Now, one of the problems that somebody mentioned this yesterday actually, is that they were talking 50%, you'll get the house for half the price and you'll get 100% mortgage. That ain't going to happen. The only time that happens is if the bank's in-house financing. That's for a start. Second one is, on these, because the only people that will finance 100% is the bank, you would be looking at your deposits and everything up front. So you're looking at about 18% upfront minimum. More likely you're going to, that's what I'm saying, you're going to get 100%. The figures don't make any sense. But then I'll throw this one into you as well. The property value you're buying at today at half price, the tax on it is at the old value. It's what the state valued it at previously. So the point being is the valuation on the property is also wrong. So you could find, if you did take one of these properties, if they even exist, that you got 18% up front and a minimum, but it's very likely there'll be other costs involved in that. If you're not a resident, you're going to have the taxes up front. Now, bearing in mind, if that was the property's undervalued by half or 2/3, you may have to pay what its old value was, which could be 3 times the amount of tax on it up front. And obviously the agency fees and everything will be on top of that as well, because these are all the things they don't mention. But in reality, I'd be very wary of anybody offering these types of things. The real estate agents will tell you the mortgages are normally around 70%. Now, don't get me wrong. If you went to Sabadell, and they have their own website as well for real estate, you'll find that they can do properties at a different value because they're stuck with them. So the point being is, if it's in-house financed and they're selling you one of their properties, obviously they can do a better deal. But if somebody's pitching this as an agent, be very careful, because the agents are majorly responsible for the collapse of the housing market, in the sense of they were taking their commissions. Obviously, they're selling properties and then financing against the properties and doing all sorts of weird stuff to get their 10% on everything. They had their hands in the collapse. This is part and parcel of the housing boom that wasn't really a boom. It was just money leveraging left, right, and centre. So just be very careful on that. But also be aware, I know 3 people so far, they've had problems with Sabadell, where Sabadell's cancelled the mortgage. Don't know why, but it just suddenly happened. Now, maybe somebody else can fill in some more information on why these sort of things happen, but that is something else to be aware of. You just need to be careful around the mortgage. But it's only, I haven't heard anybody else, just Sabadell, where people have, for whatever reason, moved into the house, bought the house, moved into the house, and then Sabadell's cancelled the mortgage at the last minute. Now, I always take these things with a pinch of salt because I don't have all the information. So, for example, they could have found out that they didn't really have the employment history that they said they had. There could have been a case of the references went through and they found out that they said they'd been in the same job for 20 years, but they already quit that to move to Spain. So there could be a lot of stuff in the background. So I'm just saying, if you're looking at property, do your due diligence. But one of the things I'm very cautious of is 100% financing on a mortgage. Don't get me wrong, the ones we've talked about earlier and Mel talks about in the comments, these are people that own the properties in the first place. The reason they can afford to mortgage it, privately finance it, is because they do the rent to buy, and then eventually you just give them the payments, and then eventually they'll give you the deeds. It's an internal arrangement, and yes, you'll get notaries and lawyers and everything involved, as you would as any other financial transaction. But at the same time, it's a case of they own the property. It's not leverage, it's not a loan, it's not a mortgage. They actually own the property outright, and that's one of the important points on that, which makes it much easier because it's a transaction from one person to another. There's no third party, which is the bank. So I just want to point that out. That's why when you hear people saying, "Oh, it's a scam because 100%," you got to look at what they're actually doing. If it's somebody that's an agent financing it through some like guaranteed mortgage and all this sort of stuff, that's when you got to be careful. But if somebody's selling their holiday home, struggling to sell it because of where it is, or they want a sale because they've got illness and it's been sat in the market for 2 years, then they may actually just finance it themselves so that somebody else can take it over. And even if that person moves out, doesn't really affect them because the mortgage has been paid. The mortgage could have been paid, but at the same time, it could be a case of they've had 2 or 3 years rent anyway. So they got something back and then had to rent out again. But eventually, if they kept doing that, they'd be in profit anyway. But anyway, I just wanted to share that today because it was just one of those things that come up today. And I just thought 100% finance, very wary on that. There'd have to be something in there. And I did mention that before about the cost of the house. Because like I said, if you're constructing it, it's only about 45% is the actual cost of the property. The rest of it is sheer profit. So that's one of the things that could actually go, we'll do 100% financing on it because they could do that, but only if it's the bank. Be very wary of somebody else because they'll be leveraging it against the bank somewhere. Just make sure your paperwork is correct. The reason I say that is you could invest in a property and then the company goes bust and you could have all sorts of problems because your loan is agreed with them. They're liquidated. At the same time, the bank owns everything, all the land and everything else, because everything was guaranteed on that investment. Love to hear everybody's comments on this one, but I thought it was a good one to pick up on today.